Okay, I just want to make a quick video on the basics of candlestick charting and a method that I've used before with some success called what I call the stair step method. I don't know if it has an official name, but that's what I call it. So to briefly describe what a candlestick is, obviously every one of these is a candlestick. Now the white ones, they're also called solid body ones. Those obviously are positive. That means, obviously, the stock is going up. The red body ones are the negative ones. And to briefly, let me get some, all right, to briefly to describe things, all right, there's a little arrow here. This is the low of the day. That's the lowest price that the stock hit that day. And up here, at the very top, that's the high of the day. And because this is a white-bodied candle, it means it's a positive one. So this is where it opens, down here, and this is where it closes. So that means that was a good day, obviously. So let's look at a red body candle. Obviously, this is the high of the day. And this is the low of the day. A very, very bad day for that stock. Now, it's the opposite. This is the opening. And this is the closing. Because obviously the stock went down, it's a red candle. So that's the most very basic way I can explain a candle. If you want more information, you just message me. I can go over it in greater detail. And now let's go over a scenario of how the stair-step method works. Okay, so let's see, I'm going to make my arrow. Let's see, put my arrow. I am going to buy in at this price here, $5.65. Sorry if it's too small. I couldn't get the window any bigger. So this is where I buy in. Well, let's say, no, we'll say right here, like 567 or something. So I buy in, I buy my stock. So next day, I wake up in the morning. No, so I buy my stock and I immediately, when the market closes, if your stock program has an automatic sell option, I will put in my sell for the low of the day, of the prior day, which is that. Now that, right now this probably doesn't make sense. You're like, why am I putting my sell in at the low of the day? But let's continue. It makes more sense as we go. So next day we wake up. It was a really good day for us. A really good day. So the stock goes up that much. So what we do, we put in our sell for the previous day's low once again. Now you're probably thinking, this still isn't making sense. But let me continue and it will make much more sense, I promise. So next day, another really good day. Goes up a lot. It's like at 583. Closes good there. So we put in our sell at this point right here. Now it's probably starting to make some sense because we bought in here and we're putting our sell in for that. Mind you, we still have the stock. We haven't sold it yet. We're putting in an order as if it hit that, we would sell. Now, if your program sells automatically, great. If not, you have to be disciplined and you have to sell on the previous low of the day. Otherwise, this method does not work. So, continuing on, we have our next day, the best day ever. It closes, actually, let me put some lines in there. Let's see, best day ever. There we go. So it closes up there. Really good day. So what we do, we put our sell in for that day's low. Now, it's probably, hopefully, started to make sense. We bought in here, down here, and as you can see, it's going up and up. So even if the stock goes down the next day and hits that low, all this line in between here, we've locked in that profit. So we go on to the excuse me. So we go on to the next day. Next day here. Stock's not doing too good. It opens here. It hits the low here. And it closes here. So we put in our sell as we have been doing. We put in our sell for the previous day's low right along this line, and that's when the we sell. And like I said, you must be disciplined and you must follow the rules of selling at the previous day's low. Because if you did that, then we have all of this from here all the way to here. That's all profit. That's like, let's see, 565 to like 586. So that will make you some money. And then you kind of want to do this. You kind of want to do this when you kind of start seeing an up pattern like this. When you start seeing the stocks going like this, you kind of got to gauge. You kind of got to gauge whether it's worth it to do it or not. But even if you buy in and the stock goes down the next day, you're always minimizing your losses. So hopefully that method makes sense to you. If it doesn't, send me a message. I'll explain it a little bit better. But hopefully this helps. All right.